Hey guys, Greg Silverman here, Cios and Bowties. Listen, I don't know what's going to make this market go down. I mean, COVID at record highs, elections in dispute. I mean, goodness, the market just seems to whistle past it. So anyway, here's a quick summary of the articles that you all have liked over the last few days and weeks. Let's begin. What does it take to scale an AI company? Founders and investors share their insights. So when they talk about scaling an AI company, you're talking about getting a company greater than $1 billion market cap or valuation. Simon Greenman at Best Practices AI cites 4 things to look for scalability. 1, is the company solving for a high value use case, so a big problem? 2, does the team have deep domain expertise and access to data sets? 3, deep technical expertise. 4, commercial and selling expertise. You know, it's one thing to have a product, it's another thing to be able to sell it. So they talk about working closely with clients. In fact, most of the stuff is not unique to AI, but mostly for technology companies in general. Okay, but you guys like that article. The next article, which was kind of interesting, is called Rent or Buy. 8 home hunters explain their real estate motives during COVID. This one was quite an interesting one. Obviously, supply of homes is low. That's something that we know. And this is a global phenomenon. Obviously, demand is high, especially in the US, UK, with very low interest rates. They talk about a use case of somebody in New York moved from Battery Park to upstate New York, an apartment in Battery Park to a house in upstate New York, swapping rents for $5,500 a month to $1,000 a month, obviously a much bigger place. They talk about culture shock going to upstate New York. There's another example about Atlanta. Another example given was Chicago. This was a 30-year consultant upgrading their apartment. So they went from $2,550 per month to $2,700 per month. Better view, more space. But what was interesting is obviously the value is higher on inner city apartments. So the price of inner city apartments has come down and you're getting more value. And then they speak about Sydney, Australia, where prices have always been a little bit bananas. They talk about somebody who went to an auction. Obviously, not many people showing up to the auction process because of COVID and the deal they got there. Okay. Next article, stock market bets against NASDAQ index hitting decade peak. Kind of an interesting article. The NASDAQ's up 72% since March, so it's been on a run. And now the short interest, so the shares sold short at the highest level in 10 years. They were last at this level in 2007, 2008, and 2015, which actually was last, which was a fairly smallish correction in 2015. Many people actually see this as a contrarian sign, citing that you need a short interest to be high for the market to actually be bullish. So take it as you will. You guys like that article. Last article is also somewhat interesting. It's called Be Tax Smart, What You Earn versus What You Keep. And this was actually written by Fidelity Investments. What they cite is over a 40-year period, about 1 to 2% return per year is lost due to tax inefficiencies. So how do they overcome this? The one thing is transition management. When you move from one exposure to another, you do it in a methodical way to be tax efficient. Obviously, short-term versus long-term gains. You want to hold on for that 1 year and 1 day to get the long-term gains. Harvest losses, obviously very important towards year end. You harvest your losses and make sure not to buy back the equivalent exposure within 30 days so that you don't get disqualified for those losses. Distributions, you monitor distributions specifically from mutual funds. Distributions from mutual funds can include capital gains, interest, as well as dividends. So they have different tax effects, so you need to monitor that. Tax smart withdrawals from tax-free accounts, IRAs, 401ks, so you want to plan that accordingly. And lastly, the investment in tax-exempt interest, example, muni bonds, which is tax efficient. So there you have it, guys. Those are the 5 articles. You know, it's anyone's guess where the market goes to from now, but we will be watching. You all take care of yourselves. Be safe. Greg Silverman, out.